So we're in this period right now where the market is worried about the U.S.-China trade relationship. Looks like some hostilities are building again. How do you think that's impacting the economy?
Well, I think it's too early to say whether it's impacting the economy now. However, I do think it is potentially an important change to the outlook. And so, yes, the labor market continued to weaken in the first half of this year. I think that part of that was due to uncertainty over policy. We might have had the biggest tax hike in history, and so maybe there were firms holding off on investing until the tax bill was done. And we also had the biggest rearrangement to global trading policy in half a century. And so while those deals were being negotiated and people were waiting to see where tariff rates would shake out, it wouldn't be surprising to me if they held off on making some decisions. So I do think that uncertainty is a potentially helps explain some of the weakness we saw in the first half of the year. And then really until last week, I'd been operating under the assumption that a lot of that uncertainty had dissipated. The tax bill had become law, and trade deals had been made for most of our large trading partners. And then, last week, China decided that the deals that had been made earlier in the year in Geneva, London, and Madrid no longer bound them. And so I had been operating under the assumption that the uncertainty had dissipated, and that therefore I felt more sanguine about some aspects of the growth outlook. And now potentially this is back because the Chinese are reneging on deals that were earlier made. And so I think it's incumbent upon us as policymakers to think about the introduction of a new tail risk. And the tail, the left tail has become a little fatter, as we might say. And we have to recognize that, there potentially is some difference now versus where we thought things were a week ago. And therefore adjust policymaking.
Downside risks to growth.
There's now more downside risks than there was a week ago, and I think it's incumbent upon us as policymakers to recognize that should get reflected in policy.
Isn't it a little early to conclude that?
Oh yeah, it is early to conclude that things are actually changing, right? But it's about where the balance of risks has moved, right? And risks exist now that didn't exist a week ago, that didn't exist a month ago.
I mean, you wanted much lower rates a week and a month ago. So do you want even lower rates now?
No, I wouldn't say that I want even lower rates now than I did a week or a month ago. However, with the change to the balance of risks, I think it becomes even more urgent that we get to a more neutral place in policy quickly, as opposed to sort of waiting for downside, as opposed to waiting for downside data to materialize. To the extent that I think that policy is quite restrictive right now, that sets us up to be vulnerable to shocks. And if you hit the economy with a shock when policy is very restrictive, the economy will react differently than it would as if policy was not as restrictive. And so I think it's even more important now than I did a week ago that we move quickly to a more neutral stance.
But, I mean, you were in the meeting for 2 days and you heard the deliberation of your colleagues. Most of them don't seem to feel the same way you do. Is that right? Is that accurate to characterize?
I think that's right, and I think that it's fair to characterize my view as in some ways out of consensus. I have no problem disagreeing with people when I come to a conclusion based on analysis of data, based on analysis of economic models, and then I give my view. And I have no problem giving that view if it differs from the views of other people, whether they're my colleagues or not. And so I don't think it's unfair to sort of describe my view as out of that consensus in some ways, but I think in other ways it's very inside consensus. If you look at, sort of the what people call the dots, right, the sum of economic projections, the only real material divergence between me and I think the rest of the committee is on how quickly we get to neutral, right? And so I wanted to get to neutral relatively quickly. I think a lot of other people have us getting to neutral also, but just maybe a little bit more slowly. And part of that difference, right, on the fact that I want to get there more quickly than others is because I'm less concerned about upside inflation in the near future, which then gives us the flexibility and the freedom to get there, I think more quickly.
What is neutral? And how do you know what that level should be?
Yeah, so that's a great question. I think we have to acknowledge that these models, so you can't observe neutral, right? The neutral policy rate is the rate at which monetary policy is neither restrictive nor accommodatory. Oh. It's you're not slamming the gas, you're not slamming the brakes, you're sort of just coasting along. And if you're below neutral, you're stimulating the economy. If you're above neutral, you're restricting the economy, you're holding it back. And I think it's important for us to understand that the models that estimate neutral tend to give us wide confidence bands. So there is some difficulty in knowing exactly where neutral is at any moment in time. However, I think it's a little bit easier to think about arguing from changes.
How we doing?
And we know that there are some economic factors that push neutral higher, and we know that there are some economic factors that push neutral lower. And so recognizing that there's uncertainty about exactly where neutral is at any moment in time, to me, doesn't mean that
What's good? How's everybody doing today?
About where it's
Live, back at it here.
And in my mind, the economy has experienced some very substantial shocks.
Nice little interview there. So you heard what she said. We're basically in this like phase of market uncertainty, and even he said like it's like interesting now. No one really knows what's gonna happen next week, next month, let alone the next couple of years with the markets, with this whole trade between China, USA. That's what's going on right now. Even before this whole week, like gold, even before this whole week, gold's price was on pretty much like a rampage already. Like gold has already been going up before this whole past week, and everything that's escalated since Friday at the end of last week. Since Friday, the news, since all this news, gold has just been ripping, right? We've seen it go from $4,000, breaking $4,200 today. We're at a nice little psychological round number. Went from 4K this week, though. We're at 4K pretty much at the end of last week. Before all this, this USA China news has came out. I don't know if you heard what he said there, how China came out with their like restrictions on like Geneva, like Switzerland, a couple countries he named there. So like the outlook has changed really quickly, and they brought up the word uncertainty a lot there. I don't know if you guys were paying attention to that first little bit there, but you could hear what they were talking about. We've entered this phase. The market pretty quickly, he said like things have changed quickly from like a week ago. The outlook. Does it mean things are bad? Maybe gold's prices could be indicating people preparing for something. But yeah, he completely said he said there like in a week things changed. In a month, from where things were a month ago to where they were a week ago. Gold's price has been fueled by this whole China-USA trade war. Again, it's uncertainty. Gold's demand has really been just fueled by this uncertainty in the market. You could ask anyone, but they don't really know. Like, who knows what's gonna happen next week, next month, 2 weeks from now? Because of China. President Trump and President of China are expected to meet. They're expected to meet, in maybe like a week or 2 weeks, so it's said. So no one like the outlook, like no one knows what's gonna happen like a week from now, 2 weeks from now, a month from now, 2-3 years from now, let alone there could be a big market crash. Gold. Probably, if the gold, as you can see, like is the one thing that'll probably be performing the best in times of uncertainty. It's always shown that. There's still strength to it. Last night, we talked about this high last night. Was anybody on last night? Does anybody remember anything I said last night? 175, $4,175, $4,168. Does anyone remember that? I even said last night, watch 4,168. I probably said it like 5 times last night, probably more. That 1 hour high held. Was anyone here last night? I did stream last night. And I did talk about that high. 14 hours ago we streamed. Alright. I did talk about that 1 hour high. How it could, if you're looking for buys, potentially it could hold the high. We had that discussion. who was here last night? We talked about this high last night. This one right here. Talked about it several times last night. I said several times, like, if the market's gonna, if you're gonna keep bullish with the momentum gold has, like, bullish setups are working. So if there's something there in front of you that you can recognize, and this is why I like gold, because it's kind of simple with price action like this when it's trending like this. A lot of break and retest. We talked about this last night, 15 hours ago, 530 views, 530 you guys. Okay, so hopefully a good amount of you were able to maybe catch on to this last night. I did draw it out. This is why I say, like, pay attention when I come on. Maybe we get a dump at some point. But that's the only discussion we had last night. We talked about gold last night several times. It was, even when I was getting off, it was jumping down to that area. I think I talked about Bitcoin for a little bit. I talked about that high last night right here. Alright, this one right here. From the 1 hour. Still holding that. Strong price action. Market ran up, grinded up, and then dipped right back to it, but it held it here too. Like, after I got off it literally came right down to there and just kept going up. And then you can see how we literally dumped right down to this zone. Still holding that high, which is right around 4175. 4175 level. Market punched up to 4200. Now it's pretty much like flirting with 4200 now. It's creating some control here, like, you know, it's holding itself up. Flirting with that like $4,200 level. Doesn't want to break it. It could be a breakout trying to come, like trying to break above $4,200. I mean, when we're looking at news this week, there's no NFP, right? Tomorrow. Yeah, like Friday doesn't have like any like crazy news that's gonna just like, whoa, maybe like turn gold crazy. Like dips have been for buying on gold basically. Tonight, I'm gonna do a really good scalping training tonight. Like, I got a really good training to do tonight. Cause man, like if you're watching the $5 levels on gold, if you're watching like $5 levels on the 5-minute chart, there's been a lot of trading opportunities on the 5-minute. Scalping. I'm gonna show you guys tonight on a training session. Gold right now, it's pretty much just flirting with that 4,200 level. Like, does it want to break it? This is where you kind of have to be patient and let the market break 4,200 and try to look for pullbacks. Because at this point, I think it wants to go above because it already quickly went down. Price already really quickly went down and was just bottoming up. And there's just been quick rejections here. And it's been staying around this level for a bit. We have support here. If it ever breaks those lows, so like support's holding here. If you don't make a new high, you'll probably take out that support. And then it's probably another buy the dip situation. Pretty much just flirting with $4,200 right now. It might try to break it tonight. Tokyo session, London session, good times to watch gold. So tonight we're going to be streaming and seeing where it's at. Every night it's been pretty much breaking up. how's everybody's week been? These drops, let's say like we're still bullish. Like there wouldn't be reason to just flip bearish on gold. Like you can anticipate like drops can happen. Like we've been in an uptrend and there's been drops like this, drop like this. We've talked about this several times. I wouldn't just flip bearish on gold, but like pullbacks, bigger retracements can be anticipated when you get to these high prices. When you're getting to like all-time price, because it's pretty much like in price discovery right now. Depending on how things escalate with China and these tariffs, interest rates too, more fuel could be added to it. Like that's what we've seen this past week since Friday. This all started, like, I mean, gold's uptrend has started since like after COVID and the multiple wars we had, and then a huge uptrend again this year started because of tariffs, and then more this year, more now. So it's kind of like last week on Friday, more fuel got added to the fire with this whole tension and phase again that we're entering with China, USA. So like along the way, like when you reach these high prices, you've had these big drops. Today we had a pretty quick drop earlier, and then it bounced right back up. From a technical point of view, it's like it could just stay above here. Like it could still stay above here. However, if like these lows, like this area, and continue, if we're just looking like here, it could still just stay above here. But at some point, I think now we gotta like prepare for like one of these drops too, and have that in kind of the back of the mind. Like one of these bigger corrections could happen as well. Along the way up, you've had some pretty big drops. Like today, like if you look at this move, it was pretty fast. Gold dropped $53. Now, the other night, gold dropped pretty much $90. So there's been much bigger drops. Like here, gold dropped, I think it was $100, over $100. Even this is a bigger move. Gold dropped $57 there. So if you look at what happened here, if you look at the price action here, gold rallied up, made a new high, it corrected down, and then it came back to test that high, and it didn't break it, and it dumped. So when you look at that price action and you look at gold right now, all right, gold just made a new high. So this high is like a crucial point. If it doesn't break it, then expect gold to have like probably one of these bigger drops, break the lows, something like this, a phase like this. Because like we made a new high and we corrected pretty quickly and we punched up, but we didn't break it. So if this doesn't hold, probably I'd say tonight, then like for a Tokyo session or going into London session, then you could potentially be starting like a bigger drop down to take out these lows. And that would probably bring us back to like 4150, maybe even 4125. Could potentially, if it doesn't really like hold, if nothing really holds tonight, if this area doesn't hold tonight, there is some support here. It is dropping back to it. Then we'll probably get a bigger correction. on gold. Something like what happened over here. Gold. Again, it was rallying up. You could see like what price did that week. It was extremely bullish. It made this high, and it kept going up, and it made a new high, but it failed to break that, and there was a dump. We have something similar but faster going on. Something similar but faster. Maybe a bit smaller, like in this price action up here with how we had this high. We made a new high. We're above that high. There's a lot of liquidity here. If buyers don't step in and hold that, then you probably try to take that out. Which is pretty much kind of like the same thing that happened over here with like price action. It had a high, made a new high, came down, retested the high but failed. So you're doing that like right now where you have this high, you made a new high. It's already kind of retested the high. If it doesn't break it like sooner than later, then expect probably like a dump down. Like what price did over here. Or even like here, you had this high made and then price came down, tested it, failed too, broke the low. Both situations broke the low. Like there was these lows here and we broke underneath that. Like here, there was this low here and we broke underneath that. So right now we have like these lows here. It could try to break underneath that. And that would more likely to me like turn into a buy the dip situation. I know I'm like scribbling on the chart, but to put things into perspective, how I see like what I'm thinking, like that's maybe the next like play on gold if this doesn't hold. I'm not looking for sells, but if this doesn't hold, if you're bullish on gold, like you kind of have this as like the area where buyers need to maintain price. Otherwise, there's like a big trap here. You have like all these lows here now built up. It could easily just reverse, go back up, continue the trend. Like gold is very strong right now, right? So it could easily do that. Just to be cautious so the market doesn't throw you off-sided, because like these moves, if they happen and you're not ready for them, you don't understand, like they can come when they come. Like you might, if you're trapped in that, might make you blindsided by the market in a way. Like this move the other day, and it might make you flip your bias really quickly. Like you might turn from a bullish trader to a bearish really quickly, right? So I mean, like this is kind of like that threshold here where the market could potentially hold. If buyers step in here and hold this tonight, and it's more like continuation, maybe go back, test the highs, form like a continuation pattern, but there's a lot of support here. The other scenario would be if it takes that support out, takes these lows out, it's gonna be a buy the dip scenario. For now, it's holding the high here. Yeah, it's been a good week though, a good month to trade gold. Good year to be like a gold trader, especially. Good month, good year. I mean, this is like only a few times in history has gold gone, let's say, parabolic like this, like late 70s to the 80s. So yeah, late 70s to early like 80s. Now that's like in history, like parabolic like what we've seen this past like year, and now it's literally been here one time, and it took forever. Like it took to come back to that price, it took forever. Like to come back, it took like over 20 years, almost 30, 28 years. And then the last time was like here, 2000, like after 2005, 6, 7, going into 2008 financial crisis, parabolic. And then what we're seeing literally this year, it's signaling something. Maybe where we're going, where we are, where we're going. It's very uncertain where we are and where we're going. It's signaling something, because all these times that it's gone parabolic have been in times of like 2008 financial crisis, recession. The one time like here it had like parabolic movement. That was like this was fueled by COVID. This movement here was fueled by COVID-19. All of this is fueled by everything, everything, a lot of things, a basket of things. All tying into, again, like one thing that's been thrown around a lot this year, the word uncertainty. Like look what happened a few months ago. They were talking nuclear a few months ago, right? Like just a few months ago, the word nuclear was being thrown around, right? So let's not forget about that. Don't forget about that. Is there an annual price target for gold? Well, what's happening right now, because one thing I mentioned on some streams is that a lot of money is going into gold because the interest rates are so thought to come down. Let's see here. I saw some questions here. Is there a target for gold? Now, gold's in price discovery right now, and a lot of money is going into gold because the interest rates just dropped. When rates drop, money starts to go into gold because things like bonds, things like high yield savings account, they don't yield as much when the rates start to go down. So the interest rates are projected to drop. That's part of why gold is going up. Because gold started going up before this whole, like before Friday. We just had a boom. But gold's been going up towards the rate cut decision as well. The rate cut decision that just happened, that's one of the factors that tie into why gold's going up. More money goes into gold when bonds and yields, when their rates go down. Central banks have been buying gold. There's been a lot of money going into ETFs with gold. Price targets, like you can look that up. Like a lot of banks, like Goldman Sachs, I think has come out with price targets for gold. And there's like medium targets, like average price targets, and then there's like aggressive price targets, and it depends on the market. Some of the things that some of these banks, analysts tie into their price targets are fueled by the rate cuts. They say if more money from the bond market goes into gold, which is actually starting to happen, has been starting to happen, that could be a reason to have more aggressive targets, like $5,000, $4,500. We're seeing gold move pretty fast though too. Some of the targets that were, price targets a couple months ago. Remember when $3,800 and $4,000 was a target for like 2026? So we also have 2026 coming, like a whole new year coming. Like how does gold trade in 2026 as well? Do we get like a similar year for gold with like how it performed in seasons? Last November, gold dropped. Like a year ago, November, gold dumped. But all the pullbacks have like, November gold dropped, but every pullback was pretty much like a buying opportunity. we haven't had like a daily trend like this on gold, like since like so if we go to gold, like last November was the last time gold sort of had like a daily trend correction, and then even in December there was like one here. After that, like all the pullbacks were pretty much just buying opportunities on gold since then. Like the longest move down we had was even like here in May, April. We haven't had like a correction like one of these since November. Right now, gold's price is rallying. Last October, price rallied, stalled out, rallied until November. November corrected last year. Now, like the price drop was $254, but it took days to do that. We haven't had days of down movement on gold like that in a while. Maybe my spider senses are tingling. But if we're looking at gold's movements now, like if we look at that, like that's days of movement, $250 down, but days of movement. Now we can look at hourly charts right now that are moving $115 in a day. So there's a lot more volatility with gold right now. I made a video a few months ago on my YouTube channel. I hope you guys watched it. Because like one thing I talked about at the beginning of the year, a lot, like January, February, March, April, I said it a lot, like it's like a different year to adjust to. If you're trading like how you were trading 2 years ago, a year ago, like things might not work the same, or 3 years ago, however long you've been a trader. But there was a video I posted a couple months ago before gold went on this rally. Posted like 4 months ago. And I was talking about how 2025 is like a different year, how there's going to be more volatility, more liquidity, and more traps for traders. And I went into a lot of reasons about Trump's tariffs. That's going to ignite trade conflicts. Evolution of gold trading is what I went to. Gold's volatility. I talked about how since COVID, gold's volatility has been increasing because in 2019, 2020, 2021, 2022, I would be trading gold with like 20, 30, 40 lots on account sizes that I still use. I can't do that right now. Like in 2020, 2021, like even a bit before that, I would be trading gold. I would be swinging like 20, 30 lots a day on gold. I would need a way bigger account to do that right now. Like way, 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 way bigger. Like the lot size I was swinging. So I was talking about how like over the years since COVID, gold's volatility has increased, and because of like the impact of the wars going on. So I went into how like you're gonna have to adapt to, like it's a year that you're gonna have to adapt. Like if you're trading this year, how you've always been trading like maybe years ago might not be as effective, as efficient. There's things to adapt to. This was posted 3-4 months ago, okay? And I talked about, because like gold's behavior is something I caught on to the beginning of the year. The dips. Go watch that video, because in that video I literally say how all the dips we've seen so far this year have pretty much presented buying opportunities. So a good strategy is to wait for those dips, buy the dip. I kind of made like a reference to that in crypto, kind of geeked out in there. Honestly, that's one of my best videos, and that's one of my best videos. I think my most viewed video is like 20,000+ views. This is one of my best videos. And when I posted it, I said, watch this. Like, this is what I've taught all year. Like, if you've been following me, I've taught this all year. That's one of the best videos I posted. You should watch that if you haven't. You might be like, damn, if you haven't been trading effectively this year, you might watch that video and be like, damn, what have I been doing all year? But in that video, I talk about what I've been talking about all year. These pullbacks, these dips, but like as the markets increase, the pullbacks have also become way more volatile, right? You're getting movements that used to take days in hours, right? You're getting price moves that maybe used to take an amount of days to make, right? That are happening in hours. So you might not be used to that type of volatility. The one thing like you gotta understand, like being a trader the next 3 years, this is just 1 year with President Trump. Think about it. This guy. Like we're just like about a year ago, this guy got elected. So being a trader or an investor in the next 3 years, you have to think about how this year went. You have to think back to some experiences, right? Some scenarios and events. Look what just happened with the whole freaking like crypto Binance situation, everything. Like if you know, you know, like the whole like crazy. I got cooked. Portfolio's down. Fucking alts. Shows you why it's good to be a Bitcoiner as well. We have three more years of this guy. So when I say that, you could look at that as damn scary fuck, or you could try to sharpen up and realize there's been a lot of opportunities with that, right? Gold. Anytime Trump says something or does something, gold likes Trump. Let's just realize, like, at this point, gold really likes Trump. Let's just say. Gold really likes Trump. Like, anytime he talks, like, gold moves, and it presents an opportunity in that. There's been times he talks and it dumps, and then after it dumps, it goes up for 3 days straight. Anytime, like literally, like Friday, this guy started something. After China came out with their update on their exports, imports, rules, and restrictions for it, the market didn't get impacted by what China did, but Trump didn't like it. I think it conflicts into the U.S. I'm pretty sure China's put restrictions on some countries with import-export, and some of those countries hold like sanctions with the U.S. So there's a whole thing going on, and like I just do technical analysis and read the market, like damn, if you got into macroeconomics. If you're ever into macroeconomics and stuff, you went to school for that kind of stuff, like maybe this is a good market to pay attention for you. If you know someone. But yeah, gold's going to be very volatile, especially middle week here. We're middle week. We've been rampaging up. We could still hold this. Like, it could very quickly still try to rebound this and go back up, but keep on the back burner what I said. Like, you could have one of these bigger drops. And now, if you're a trader, one thing is adapting to the market. Like maybe 2 years ago, a year ago, or a couple of years ago, you had like really good trading performances. The market might be different this year, right, than what it was 2 years ago, a year ago when you were trading, right? You have to adapt to volatility, and I got slapped in the face one month, and that's what like how did I adapt this year? Well, it came after getting slapped in the face 1 month. Maybe it was like 2 months. It was like May, June. Crypto was great at the time, but like gold, I got slapped in the face. So how did I adapt? It was okay. Take a step back. Like the first thing I did was just take a step back. I didn't focus on trading. I'm not gonna trade for maybe like a couple of weeks. I didn't stream as much. There was like a period I didn't stream as much as well. I wasn't on the market as much. And I just started to measure and account into some of the things that I'm even saying right now with volatility, like understanding just like where I went wrong in terms of volatility and understanding like how I'm used to doing things maybe is not going to work out in this market condition of volatility. So I need extra patience. That's one thing, like extra patience. Not as I'm aggressive though. That's coming from an aggressive trader. Like I'm an aggressive person. I like risk. I have an appetite for risk. So I need to really slow down the aggression with the volatility, because one thing I started to notice like this year, like earlier this year, was that these movements, these average movements that you get, you might get an average move that you're used to getting, and then you're like, okay, it's time to buy now. But it might extend. So I got used to like catching on to like some of these movements that I'm used to seeing, like these smaller moves that were still big moves then, right? Like we used to target 200 pips, right? Like we would target 200 pip swings. The market's moving 200 pips in an hourly candlestick. Like we would target, like our targets would be like, yo, let's go for like a 200 pip move or this, that, like a couple of years, like let's say like 2-3 years ago. Like getting like a 200 pip move. Now you're getting like 200 pip candles on the 15-minute. $20 moves, $30 moves on a candlestick, or like in an hour candle, right? You're getting $80 swings, $50 swings, like nothing. Price going up $30, down $30, kind of like nothing, right? Like gold dropped $53 and then rebounded $41 and then drops again $30. So like 2-3 years ago, it would be gold dropped $200, gold dropped $20, and then it rebounded $10, and then it came down $8, and then it went up $12, right? Maybe even other markets. Like I'm more of a gold trader. Maybe, I don't know. Like I can't really say it for currency pairs. Currency pairs are probably more volatile right now than they were 2-3 years ago. They probably have more volatility in terms of their average pip swing, I would expect, because if gold does. Euro USD is probably more volatile than maybe it was 3 years ago, 2 years ago, even ish, 2-3 years ago ish. Because like, if you look at gold's moves right now, like it's dropping $53 and then rebounding $41 and then going down $30 and then going up $35. Whereas maybe some years, like in the past couple of years, those moves would be average. Like this $53 move would be a $20 move, and then this $41 move back up would be maybe like a $15 move, a $12, $15 move, and then like an $8 move down, right? Like, so one thing, like you have to adjust to volatility, and you might have to set some disciplines for yourself. Some timing, like extra timing, like let the market get to that extreme point where it's like, whoa, it's dropped a lot. Let it get to those points of extreme drops. They might seem fearful. Obviously, from someone who's been trading for 11 years, I'm not really afraid of those, unless it's like what altcoins did the other day. Like that was pretty crazy what altcoins did. Bitcoin's at pretty much like a threshold right now, like a wall. Like basically with Bitcoin right now, like it's either make it or break it with where price is at right now. $110,000. It's been a pretty strong support for Bitcoin, but if we break underneath like this area, we might try to take this out. Like we have these lows here, 110s right now. It could get a little bit dippy for Bitcoin. It could try to take out these lows. It's just kind of like where gold's at on the smaller time frame. You had pretty much some up and down here. Like you had resistance here around $110,000. Since we broke above that, it's been down and up. It's been up and down for Bitcoin. Gold's super parabolic, its movements right now. I don't think Bitcoin will go parabolic or have parabolic movement until gold slows down too. Until more rate cuts happen, until they start printing money again, and then until gold has a big correction. Once gold has a big correction, I think that's when Bitcoin would have more of a parabolic movement, and that might be something hard to time right now. Yeah, right now Bitcoin's at a level where it's make or break. Like we could get, if we get a bounce from here, we could go back to 120. That's the upside. But if we don't hold this level, like if you're trading Bitcoin, I would keep your stop losses tight, because if we break this level, we could probably try to swoop down to like 106, 103 maybe. Take that out and then see how price behaves from there if it forms a new support. It's a level that has some sensitivity and some strong power to it, like, but there is liquidity there. There's a lot of liquidity underneath this level, around this level. We can see previously like how this area has acted as a strong resistance for Bitcoin. However, there is a lot of liquidity here. Leverage traders are long again, even just in 24 hours the other day. So after the big liquidation, like after prices dropped the other day, there was some relief and we went down again. In 24 hours, $650 million got wiped out again on leverage traders going long again. So leverage traders going long again, 650 million got liquidated. So like a lot of the movements we're seeing down are wiping out leverage traders. Like if you're a spot Bitcoiner, if you're just a spot Bitcoin holder, it's like you're pretty good. Like Bitcoin's still $110,000 per coin, still expensive, right? The cost to mine one Bitcoin is very expensive too. Like it's tens of thousands of dollars, upwards to like 6 figures, depending on where you mine, what you mine with, the exact electricity cost. In some cases it can be cheaper per kilowatt of mining, like how much cents it is, but it's like average like tens of thousands, like 30 to 60 to $1,000. Like I just let the lowest like 60,000, 70,000 I think last I saw to mine one Bitcoin, upwards to like 100K. You can look it up, ask ChatGPT how much it is to mine one Bitcoin, or go on Google. It'll say like at the low end like up to like 60,000, 40, 50, 60,000, to the high end 6 figures to mine one Bitcoin. Electricity cost, because it's energy to mine Bitcoin. If you're a Bitcoiner, it's not like a bad, like it's not terrible, like, but we're at a similar like stage now where we had a rally up and then Bitcoin started to go up and down. Like we have, see this support over here. We're in a similar stage with Bitcoin, like here. Like when Bitcoin took out those lows, it dropped 20%. So that is the worst case scenario. And think about what we just seen with altcoins. So a lot of things would not survive in that instance then. So that would be like the worst case scenario if we have a situation like this. If Bitcoin doesn't hold this level, it could go down to like test 100K, 103. And that's for Bitcoin. That's for Bitcoin. Like where's the whole other market then? Right? That's for Bitcoin. Like where are altcoins, meme coins, Ethereum, Solana, and stuff like that then, if that happens? So sometimes like I talk like this, like I'll go over like the other cases that could happen. Like I'm going over the worst case scenario right now, because sometimes like as a trader, To be long term in the market, you want to think of worst case scenarios before you think of like the best cases. Okay, you don't always want to be thinking like prolong, like what's the best case, best case. Things happen. Like November tends to be a bullish season, so we would if we get a positive November, that's good. If things turn around towards the end of the month, the fundamentals for crypto are not bad. When we look at a lot of the news, I think we'll have to do a session on that stuff. Worst case is if we take out this liquidity, because you gotta think like leverage traders, 20 billion, it might even be more than that. $20 billion was wiped out in leverage trading. If you're holding your crypto, you're still holding your crypto, you're good. But a lot of people have that crypto loan. So one thing about these leverage platforms too is you can loan out. You can like use your crypto as collateral to get more exposure, more leverage, or even just more crypto in general. You can loan out your crypto to get collateral, to get more exposure, or you can have your crypto assets as collateral for leverage. That's where a lot of this came from. So in some cases, some people lost like their USDT, their cash, whatever they had in their trading account. Well, in some cases, like a lot of people lost their crypto, like the crypto that they had in these leverage platforms because it was used as collateral. There were accounts, like I looked at 15 accounts. There was one account I saw went from like $45 million to $336,000. Imagine going from 45 mil to 336,000. That'd be crazy. There's accounts that went through extreme hits like that, like 45 mil to $300,000. People are saying there. If you go on Twitter, like there's people saying China intentionally crashed the markets to gain leverage over Trump. There's conspiracies or opinions out there. Go on X.com, follow some crypto pages, follow some news pages to the market, so you can keep up with things. Tonight in Inner Circle, we're going to do a good training session tonight in Inner Circle. Make sure you guys are on if you're in the Inner Circle tonight. Like if you go out, like all I follow, like if you go here for like my X.com is this. I just follow a bunch of different pages. President Trump accuses China of economically hostile act for not buying U.S. soybeans. See, like this is the type of news, like this is the type of stuff like you might not be aware of. Like you might just be doing nothing, watching a movie or eating. You might just be eating, and Trump's tweeting stuff like this. So one thing is like I'm always on my phone, and I have like Telegram pages I follow, some accounts I follow. On the session tonight, I'll show you guys. For you guys that are going to be on the session tonight, I'll show you tonight. BNB to be listed on Coinbase. See, like I just got a notification about that 30 minutes ago. Binance Coin, BNB to be listed on Coinbase. Yeah, if that happens, then that's probably why BNB's been pumping. BNB's been pumping. So it's like, it could be like a sell the news situation. It dumps, buy the dip. Because BNB's been pumping. And now BNB's going to be listed on Coinbase. So take that. You could take it for however you want. You could take it for, BNB. Some people might take it for BNB's getting listed on Coinbase. That could be super bullish for BNB. Or some people might take it as BNB's been pumping like crazy the last couple months. What if that's a sell the news situation? You gotta kind of think of both sides. Remember, worst case, you gotta have like worst case scenario thinking. There's still like been there's still been a lot of like positive fundamentals around crypto. Yeah, introduced bill that would cement President Trump's executive order allowing Bitcoin into 401ks. I don't know if that's true. All day there's like with Trump all day there's news coming out. Yeah, the US seized 127,000 Bitcoin. More than most nations holding gold. Digital gold. Yeah, yesterday Powell spoke, and Powell says that QT will end in coming months, quantitative tightening. Powell just said that quantitative tightening will end in coming months. They're explaining this thread. Quantitative tightening is when the Fed removes money from the system. They do this by letting bonds roll off their balance sheet, basically reducing liquidity, less money, tighter conditions. Risk assets, stocks, and crypto usually drop. So now Powell says QT will end soon. That means that the Fed will stop reducing liquidity. Money will stop leaving the system. When liquidity stops shrinking, markets can finally breathe again. That's why it's bullish for Bitcoin, stocks, and most risk assets. So QT is the first step for QE, quantitative easing. So what's said is that QT to stop is like the first one of the next, like the step for what everyone's watching for quantitative easing. When the Fed adds money to the system, they do this by buying bonds, injecting liquidity back into the market, more liquidity, easier credit, assets, prices pumping. So the Fed isn't doing QE yet, but ending QT is usually the first steps before QE starts. And when QE comes back, that's extremely bullish for assets, stocks, cryptos. Yeah, so crypto bill is out. Yeah, executive order for that. Also, I think the first office. Yeah, this is basically my Twitter page. The biggest Bitcoin salesman to Wall Street is now selling crypto. Yeah, Larry Fink. He spoke on CNBC. He's been speaking.
Globally, digital wallets. A lot of that money is outside the. I do believe we're just at the beginning of the tokenization of all assets, from real estate.
Oops. That just disappeared.
Beginning of the tokenization of all assets, from real estate, to equities, the bonds, across the board. There's $4.1 trillion of money sitting globally in digital wallets. A lot of that money is outside the United States. If we could tokenize an ETF, and digitize that ETF, we could have investors who are just beginning to, invest in markets through, let's say, crypto. They're investing in it, but now we could get them into the more traditional long-term retirement products. So we look at that as the next wave of opportunity for BlackRock over the next tens of years, as we start moving away from traditional financial assets by repotting them in a digital manner, and then having people stay in that digital ecosystem. I do believe we're just at the beginning of the tokenization of all assets, from real estate.
Digital real estate, tokenizing houses. You have your properties. I have a house with 2 properties. Imagine having tokenized your property, like tokenized real estate. This guy sees commissions though. This guy's eyes, look at his eyes. He's fired up because he's just, commissions. Think about like, he probably wants Bitcoin to pump, because think about the commissions like his clients buying. Like, he wants Bitcoin go to $500,000 because the commissions they'll be making at those prices too, right? This guy's eyes. I can see it in his eyes. I know when someone's eyes fire up when they see money. It's I can see it in his eyes. Yeah, a lot of people comparing this to like the COVID crash. Bitcoin needs to hold basically 111, 110. Right? We need that 111, 110,000 to hold. I'd keep it tight. Like, that needs to hold. If that doesn't hold, if it holds, it could go up like literally in the last like 10 days of October. Maybe bounce us back to like 120. Reclaim the all-time high. I'll show this. I have another thing here. Let me see. Most October's here. I'll pull this up. Like, if we look at, a lot of people are saying the 4-year cycle's done. We're gonna really see that, and if that's true, in the next couple of months here. But let's see if it sent to from my phone. Yeah, it did. I've been through all these. See, I've been in Bitcoin since it was $1,200, so a lot of these, like, I've experienced. Usually, like, we can see historically, and if we're talking about like a 4-year cycle, Bitcoin does start with like a bearish October. Is that going to pump it 400%? I don't know if it's going to pump it 400%, but maybe still. Oh, this is crypto market cap, maybe excluding Bitcoin. Usually things do start off bearish in October, or there is a dump in October. Same setup, same structure, same chart. Don't say I didn't warn you. October 2017, dump. October 21, October 25, big dump. I mean, some people are considering that because literally, like, first couple days of October were bullish, but October has dumped. It is a red month right now. There's a possibility the last 2 weeks reclaim, but we gotta watch out for this liquidity. Like, it could try to liquidity sweep before even doing that. I'm still pro Bitcoin, bullish on Bitcoin. I haven't flipped bearish to Bitcoin. It's been above 100K for 161 days now. But I do know if like things escalate, worst case scenarios, like how to measure those worst case scenarios that could happen. For now, we're still pretty strong at that 111, 110. That's the level that needs to pretty much hold. Like, if you're just a Bitcoiner, this is why it's not good to be spread out in like 20 different cryptos, even like 10, like 3 to 5, 3, or even 2 to 3. Like, because if you're just someone who just plays Bitcoin, like, or just like mainly a Bitcoiner, or even like Ethereum, right? Bitcoin's not all in all that bad. Like, it's holding 110, 111,000 pretty strong. But if you're very spread out, like if you have like 20 coins, 30 coins, 15 coins, a lot of different coins, then those Bitcoin can drop to 110,000, but all those other coins can drop 40%, 30%, 20%, 50%, 60% at different times. Versus Bitcoin could still be trading at a fair price. Yep. 1 hour candle is very bullish on gold. What do you think? Do I think it's pumping from this price action? Yeah, like 20 at the low end, 20K, 30K to mine. One, energy cost, like electricity cost. So at least it has that value to it right there. 1 hour looks bullish on gold. I think gold is maintaining itself. Pretty kind of like holding itself. Like, it is holding itself above the high. Consolidating. You could attempt to see if things hold here, like if we hold. It is just kind of holding itself, like I said. We're holding above that high. That's the same high I went over last night. So I went over that high last night. 1 hour does kind of look bullish. It's in more of a holding pattern right now. Gold has strong demand, so overall still bullish on gold. Like overall just still bullish. We just came back almost to 75 again. I just tested that like 80. Still holding above that high, so I think as long as, like, these are called holding patterns now. It's when it's like just kind of like chopping around, controlling itself. Like the buyers are in control here because every time it goes down, it just gets bought up. Like ever since this move, buy. Even now, just fast drop on the 15-minute there. Even now, you're getting a fast drop there on the 15-minute, right? Dropped $17. Quick buy up. Like even now, just how price is rejecting on the 5-minute chart for gold. Like you're getting these moves down on the 5-minute consistently that go $15, $20, even like $30. But they start to reject. And you're getting a lot of clean moves up on the 5 minutes that reject really well. Like I was scalping a lot last night on pullbacks like here. Every 5-minute pullback the market did, I was looking for like an entry on the 5-minute. Last night, there was a lot of pullbacks. Like look at all these pullbacks on the 5-minute here. Every time the 5-minute starts rejecting, you're getting some clean buy signals. Here, once you start to get some 5-minute rejections. Now, if you start to tie that in with whole numbers, you'll get some good entries. Like you start to tie that in with whole numbers, you'll have some good entry points when you start to tie that in with the whole numbers. Like right here, I took a buy last night. I was like pretty much like going to bed here on this 5-minute candle, and structure was bullish. And yeah, gold's ripping right now. What do you know? If you follow the 5-minute for a few hours, some nights, like I have a lot of time to watch the charts. So I spend a few hours a day watching the charts, and then think about the streams that I do too. So I'm always watching the charts when I stream too. So I spend a few hours a day watching the charts collectively. So for me, I'll follow the 5-minute a lot at times, nighttime, going into London hours, and I'll watch the pullbacks. Like I'll watch the pullbacks closely because I'm very used to it. I've done it for years. You can see, like, if you follow this flow of price, pretty much every time the 5-minute pulls back and it rejects, you're getting a good price continuation. I'm gonna go over some of this stuff tonight. On the inner circle session, for those of you guys in my inner circle, there's some good moves that can happen even just on the 5-minute that give you a slight pullback, rejection on the 5-minute. If you tie that in with whole numbers, you get some good moves. New York, when did this drop? This dropped. Damn. If I was awake, I wish I was awake. I was out of trades by then and out of the market. I wish I was awake when this happened, when this was dropping. I missed that, but I was still able to catch some buys. Gold's going to be pretty volatile. Like, look at what it's doing right now. Just even like when you look at the 5-minute, every move that comes down just pretty much gets bought up. You have these small 5-minute moves. Some of them are cleaner, like even this, but there was a pretty big candle there that moved. Like that was a pretty clean drop, rejected. However you look at it, my eyes can see every drop turns into a lot of scalping, buying opportunities. And right now, with the way gold's moving, you can get $10 movements pretty quick. Like even on 5-minute charts, with the way its price movements are happening, like every drop does bring a buy scenario, like a buy setup. Now, when you tie the whole numbers in this, we talk a lot. I've talked a lot about it on my YouTube. If you're in my inner circle, you should know a bit about whole numbers. Like, look right here, for instance. Like, you have 195. You got to be really good in this market. If you're good at, like, you don't have to, but if you're good at reading the 5 minute, and you're good at watching the whole numbers, you'll spot and recognize a lot of setups in these markets in the day. I wait for pullbacks. I look at the whole numbers it's at, because on my phone I keep my whole numbers marked. Like here, there was a big drop that even went to like 190, but there was a huge wick through. New York hours are gonna have a lot of volatility, so sometimes trading like late Tokyo, London is even good. Oh yeah, gold's pushing right now back at 4,200. It's pretty much flirting. Like when I got on, I said it's flirting with $4,200. Still above this high. We talked about literally last night, guys. Like if you were on last night, I did call out this move last night, like the exact move gold made. I called that out. I did say because it has strong demand and momentum, it could stay above that high. So we are well above the high. Maybe tonight we get like a break above 4,200. Pullbacks or dips, I would be look at buying situations. You can go on any time frame and look at like even the 15 minute. Like if you're waiting for decent, like this is the thing with gold. These moves can be kind of unpredictable. They're usually when price is exploding to a new all-time high. But like when the market, like look here on the 15 minute, you have these pullbacks here on the 15 minute. Honestly, like if you really watch gold, spend time watching it, you'll see a lot of pullbacks just get eaten up. Even if you're looking at a 15-minute chart, all these pullbacks get eaten up. 4,200 kind of looks like it's trying to get above that. Like it wants to stay above it. It could be a breakout level, and we just make break of structure continuations. And we try to maintain and stay above 4,200. Pullbacks, like I said the other day, if you're in my Discord, what was that? What did that quote I said? I said, don't fear the dips. If you're in the inner circle Discord, if you're in that section, I even said last night, like it could bounce from this area, and it literally did. But if you're in the inner circle, I did say yesterday, don't fear the dips. You had a dip this morning. If you were awake there, that was literally one of those dip situations really fast. Probably more price continuations on gold. Tonight we'll be streaming. I went over a good setup last night. I gave you guys literally the exact markup last night. Wait for some dips, wait for pullbacks tonight. Wait for continuations if it gets above 4,200. I'm going to be on at 8:30 p.m. tonight. I mean, if gold can slow down, Bitcoin should pump. Like gold is pumping. Usually, like anytime gold has pumped, Bitcoin has been in a stage where it's dropped, it's at its low, or consolidating like sideways, getting ready to pump. Gold usually actually pumps. Like if we're looking at this chart, when Bitcoin usually pumps when gold goes down, when it retraces. I'm gonna be on 8:30 tonight, Eastern time, 8:30 p.m. tonight. But that's going to be in the inner circle. I'm going to be live in the inner circle. Right now I'm just streaming public, but tonight I'm going to be on the inner circle, 8:30 tonight. Like gold has really moved once Bitcoin's made like Bitcoin has really moved once gold has made like a major correction historically. just looking at my profits. Man, this is like one of the swing. I held some swings on gold from low way down, like $4,100. Had a good week. Flip week. There's been a couple flip weeks. Yeah, 8:30 tonight Canada time. Miami or New York time. Same time as Canada time. Eastern time zone. We call it EST. When gold tops out, like when gold goes for actually like a major correction and like a bearish trend, money moves towards Bitcoin historically. So when gold actually tops out, that's when Bitcoin goes on like a rampage. That hasn't happened. Like gold, we don't know when gold's really gonna give that top out signal. Like corrections have been like this for gold. Even I think in there, Bitcoin was pumping a bit. Maybe no. Like last time Bitcoin pumped, did gold correct for a period of time? That's something to look at. There's some homework for you. There's some homework you can look at. If we get a major correction on gold, then Bitcoin would go parabolic. Maybe that can happen. If it doesn't, we have to see. Bitcoin's something closely to follow though right now. Ethereum. Can Ethereum what? Does Ethereum have more potential? I like my favorite too. Like this is the market just kind of showed why Bitcoin and Ethereum are like my favorite in terms of like portfolio allocation, because it's like, okay, Ethereum's a bit below 4K. It went to like 3,500. It's the two that in like the worst cases now we've seen with crypto, like when the market can go terrible, that can still hold some good value based on like what one is worth. In terms of percentage, Ethereum has more potential. Like if you're looking at percentage upside, like how much percentage Ethereum is going to move, yeah, it has more upside potential in terms of percentage. Wherever we make that bottom out, like we came to 3,500. Maybe we try to go back to 3,000. Like a more of like a worst case. In terms of potential, like if you mean like percentage wise, like if Ethereum drops, if Ethereum goes up from here, or if it goes back down to 3,500 or 3,000, it has more upside potential in terms of percentage. But yeah, I'll be live tonight. We'll be back on tonight. We gotta keep an eye on gold. It's flirting with $4,200. Like it's a market that I'm experiencing for the first time every week. It's like kind of like a interesting experience because we're literally trading like a price discovery market. It's flirting with 4,200, still above this high, so we're still bullish on it. Like it could try to break out tonight if it stays above this high. It could easily come back down on the 5-minute. Like price is making literally like $20 swings up, $20 swings down, like nothing. It could easily drop down $15 and still be around this level. Again, if it takes out the lows, if you get these lows taken out, I wouldn't fear it so much. I wouldn't have like crazy fear. I would just let it drop, like let it get to that extreme point, because if it takes out those lows, it's probably gonna have like a bigger drop down to like 4,150. Just because it pumped up right now doesn't mean it's just gonna skyrocket, right? Like Price could easily drop $10 and it's back down here. It's making literally $10 swings, $10 movements like nothing. So like you don't have to fear out that you're gonna miss a move, because like price is making $10 swings like nothing. Yeah, I'll be live in the inner circle tonight. So if you're in the inner circle, I'll be live tonight at 8:30 p.m. Eastern time. All right, that's in like 6 hours. Maybe 8:30, but maybe a little bit before, like 5 hours, but 8:30. So maybe like 8:30, so like 5.5 hours. 8. I'll be live between like 8:30. Depending on the market, like if I started earlier, it's depending on the market. But I'll be live at 8:30. But if I started like 20 minutes earlier, or depends on the market too. Like if I have to start it earlier, I will be if the market is looking like good. But I'll be on at 8:30. Unless the market's like looking like it's setting up, I might be on like 30 minutes before. But I'll be on tonight. Peace, peace, peace.